The Fed just flipped the script in a nearly unprecedented move that has the potential to change markets forever. But did they go too far this time? Hello and welcome back, coming to you from Singapore. We're out here for the Token 2049 event, which we've attended over the last couple of days, meeting some absolutely great minds working on some absolutely great stuff. And the sentiment is so positive given the absolute blinder of a result that we got from FOMC yesterday. That was a 50 basis point rate cut, not the expected 25 basis points, not the less than 25 basis point rate cut that some were predicting, but a 50 basis point rate cut, and the first rate cut in over 4 years' time, marking a total shift in global markets. And just as we expected and as we explained in the last video, that higher than expected rate cut resulted in a bullish move in markets, including crypto. Further to that, we've got expectations of more rate cuts over the next FOMC meetings, bringing the benchmark rate down to 4.4% by the end of the year. Now, just to give you an idea of how rare a 50 basis point rate cut is, this is only the third time in history ever, in the history of the FOMC, that a rate cutting cycle has begun with a 0.5% reduction in the base rate. Like I said in our last video, and as was expected, given a higher than expected basis rate cuts, markets turn bullish. This happens for a number of reasons, mostly because capital moves from interest yielding investments into risk on assets, such as the stock market, such as crypto. So as you can see, markets responded as expected to the unexpected result at FOMC. Unexpected to the bullish side, that is. S&P sitting at a new all-time high of $5,723.6 at the point at the time of recording, and Bitcoin also sitting at a new high for the last couple of weeks, having broken local resistance at 61.2, that level we spoke about in the last video, and now hovering around the $63,000 mark. This happens for a number of reasons, mainly the fact that a lower interest rate means that investors can get less return on investments in yield-bearing assets, things like bonds, etc. And this encourages a flow of capital into risk assets like the stock market and like Bitcoin. Part of that move also precipitated, as tends to happen because there is a lot of leverage in the crypto market, by short positions being liquidated. That is, traders betting on the market going down, perhaps speculating on a lower rate cut than expected by the Fed at FOMC. The sum total of that was quoted by CoinGlass as being around $128 million within the last 24 hours. So everything looking pretty good. From a technical perspective, we still remain in this sort of limbo area between the swing high at $65,000. Again, as I mentioned in the last video, this is the level we need to break if we are to break out of the downtrend that we've been in over the last couple of months. To the downside, what I really want to see is if that $61,200 or $61,300 level holds up. That would be a case of resistance turns support and would be the starting point for me from a technical perspective for that push up to a break of the $65,000 level. Bitcoin not actually the biggest mover in the crypto space after the FOMC results. Sol was the biggest mover to the upside with around 6% since the 50 basis point rate cut was announced. Why do we care the most about Bitcoin? Well, as we know, the rising tide floats all boats. As I mentioned, I've spent the last couple of days at Token 2049, the biggest crypto summit in the world that I know of at least, meeting great minds working on great new projects. But sadly, as history has proven constantly time and again, aside from the bigger alts, none of these smaller caps, new projects, new ideas really have a home to thrive unless overall market sentiment is healthy in the crypto space. Talking market sentiments, fear and greed index still at a neutral, sitting at 49, up from 45 yesterday, and of course seriously down in the 30s in near extreme fear last couple of weeks. So strong macro, strong technicals, we're in a good place to move up from here. Everything is looking great. But as I alluded to at the start of the video, I am concerned in this case that the Fed has actually gone too far. And I know that might sound funny because the last time we spoke about this, we were talking about how a better than expected result would be bullish for markets. And quite clearly that has proven to be the case. But let me give you some stats about 50 basis point rate cuts, which concern me about the sustainability of markets as a whole and this move. So check this out from Kevin. Exactly 17 years ago, the Fed cut rates by 50 basis points in a surprise and bold move, even though some suggested that that would mean the Fed was acting out of desperation. Literally September the 18th to the day. And that was obviously September the 18th, 17 years ago in 2007, right before the 2008 financial crash. This data actually goes back even further. So in the last 21 rate cutting cycles that included a 50 basis point or 0.5% rate cut, 50% of those cycles were followed by a recession. And spookily enough, of the last 21 rate cutting cycles, which included a 25 basis point rate reduction, 25% of those cases were followed by a recession. So there's obviously an inverse relationship there within that statistic. If we add into the mix Fed Chair Powell's statement that everything is fine, and I quote, everything is fine, we get this sense that this extreme rate cut, I think we can call it an extreme rate cut, might be a little too late, and might be based in the same intentions of making it appear as though everything is fine when it's not in fact fine, right? Saying everything is fine kind of sounds like someone who doesn't think that everything is fine. As I mentioned in the last video, I have my suspicions that this rate cut is driven by an intention to quash fears of an oncoming recession. Cointelegraph here, I will link this article in the description. The Fed continues to say the economy is strong and they are calling for a soft landing, but policy decisions are as if we're in a crisis. Something doesn't add up here. They're referencing that same statistic that, generally speaking, these big 50 basis point rate cuts actually come right before a crisis. In 2001, the market fell 31% after 2 years, and in 2007, of course, the market fell 26% after 2 years. These were major crises. While seemingly boosting liquidity, rate cutting cycles beginning with a 0.5% decrease ultimately result in losses for US equity. Now, all of that being said, the markets have clearly responded strongly, at least in the near term, and I do think we go up from here. My next 2 points to watch from a technical perspective will be that 62.2 level or 62.3 level, depending on which market exactly you're looking at. If we can flip that form of resistance into support, I think we'll be in a good place to move up and break out of the technical downtrend at 65,000. And to finish with some further bullish news, Trump buying fans burgers and paying with Bitcoin at a New York bar. Obviously a publicity stunt, but apparently the first president or first former US president in history to pay for goods and services with Bitcoin. As always, that's not financial advice, just my opinion. Plenty more to come. Catch you in the next one. Cheers. Bye-bye.